Hello traders, welcome to another video on this channel. So in this video, I'll be showing you how to trade SMT correctly and how to make money while trading SMT. So we'll be using this example on USD card, right? So as you can see here, I'll be marking the chart. I'll clear all of this. We'll mark the charts together. You'll see how you can mark your chart starting from A to B. That means you're starting your top-down analysis, right? From the higher time frame to the smaller time frame. I'll show you then we'll get up to this trade. I'll show you how you could have caught this trade or how you use this very strategy to cash similar trades like this in the future, right? So now let's take a look at the chart, right? Of course, we'll clear everything from this chart. Remove all joints, right? Now, at this point, as you can see, at this point in time in the chart, right, we see that we are extremely bullish at this point. We're extremely bullish at this point. So what you do is you mark your structure, right? First, when you're marking the structure in an uptrend, you mark your inducement and you mark your last pullback is your inducement, then you mark your break of structures and so on. So we start from here. We start from here. This level is our last pullback, the upside. You mark that as inducement because that is what it is. Now moving up again after inducement, after this inducement has been taken out by this subsequent move, we have a break of structure. You can see price close above. This is called a break of structure. Now, when this break of structure occurs, right? Once you have this break of structure, what are you looking for in the market here? Right? The first thing is your inducement. The first thing is your inducement. After your inducement, you can start looking for buy opportunities, right? Now, looking at the chart here, you can see that this was a minor pullback here. So we mark this as as our pullback, as our inducement at this point, because the first pullback after a break of structure is known as inducement, right? The last pullback on this leg to the upside. Now, mark that as our inducement. So if that is our inducement here, this is our break of structure. That is our break of structure there because this break of structure took out inducement. That is the only thing that validates this break of structure. It's not whether the move was a bigger move or a smaller move. So long as it follows this criteria by taking out inducement, then that is a valid break of structure. Now, after this break of structure, what are we looking for now? We are looking for a zone where we can buy from, right? We are looking for a zone where we can buy from. So what we're waiting for is for price to create inducement, then subsequently take out the inducement and we can buy. Just like what happened here, right? If you see here that after price created this inducement here, price took out the inducement and tapped into this order flow here. Because if you see here, this was already mitigated, this was mitigated, and yeah, this was our last candle because this one is an inside bar, is inside of this candle. So this was our zone here which we could start looking for our buys. Basically, this is how our zone was. All right. So now at this point, after this break of structure, we're waiting for inducement, and then for inducement to be created and taken out, then we can then look for buys. But what you can see here is in this case, right, there was no inducement created. Price just pushed below. There was no pullback here. There was no pullback here. Something like this, right? When I say pullback, I mean something like this. Then for it to be taken out, then we can buy and rally up. You can see there was no inducement at this level. So what do we do here? All right. What we do is this low now becomes our inducement. This low here becomes our inducement. Even though the low created a value break of structure, but because of the lack of inducement, the low now becomes inducement. So now when this happens, right, we are looking to buy at the extreme. We are looking at to buy at the extreme here, because this break of structure now becomes like sort of invalid, becomes sort of invalid here, right? So now we you just backtrack, but if you look here, this was already mitigated, and unless you want to use the week of this, something of this sort, you extend, and if you get a small time frame confirmation here, you can look to buy. Now what the market did is the market pushed down, right? Since this was not a break of structure, this will not act as our valid change of character, because there was no inducement. Inducement needed to be taken out for it to act as our change of character. So this is this is the zone here which acted as our change of characters in this case, right? This zone, this is our change of characters here. That is our change of characters. Now, after this change of characters, right? After this change of characters, we know that the market is bearish. We know that the market is bearish. So now, how can you start looking for trades here? After this change of character, the main thing you focus on now is you don't longer focus on this leg. You don't longer focus on this leg of this price. You just simply shift your attention now to this, to the leg of this recent price here, right? To the leg of this recent price here. And now what you can see now is we are in this leg will be bearish, will no longer be bullish again. So we are concentrating on these bearish moves here. So after this, you look for your break of structure. You look for your inducement. First, you start by looking for your inducement and your break of structure. So here you can see we have levels here. You have, if you start marking your inducement, right? Because you know that inducement normally you normally shift the inducement. First, after this break of structure, you see that this is the inducement here. This is not inducement because it did not break this low. So our inducement should be here. And we waited, price continued creating new inducement, and so on and so on, until finally the inducement that was created here was taken out. So anytime that price creates a new lower high and the lower high is not taken out to act as inducement, then you shift it to the most recent lower high. So our most recent lower high was this one in this case, right? You can see this is how this move is. This move is something like this. You see, right? So sorry about that. So the move ended here. As you can see, this move ended somewhere around here. So that is our valid pullback in this case. So now that the valid pullback has been taken out, right, we mark that as our inducement. We are marking this as our inducement. Just put in an X there. X marks the spot. Now, after this inducement has been taken out, right, after this inducement has been taken out, now you can start looking for sales. Now, what you normally have after inducement are two POIs, right? I have two POIs which are uh you have two POIs, our decisional POI and our extreme. Now in this case, now if you look now here, right, you see that this POI here is of extreme. That means this POI here is high probability because it swept this previous high here. The candle swept this previous high, so it took our liquidity. So now what we can start using is we can, if you move this candle, you see that it has no imbalance, right? You move to the next candle, it has no imbalance, and if you move to this other candle here, you also see that this candle has also swept the liquidity of this previous candle. So this is an excellent candle here to act as our point of interest. So you draw the whole candle, you mark the whole candle, and you extend. You extend, right? You are waiting for price. When price pushes up to this zone at any time in point, then you can sell. You can sell using lower time frame confirmation at this point. Now, what normally happens is when price is pushing up here, right? Many traders were kind of trapped here. They were kind of selling here. They sold early at this zone. So these are some of the traps we should look for. decisional POIs, right? You need to be careful because these things they'll cause you a lot of losses if you are not if you know that you want a high win rate, right? Just use your extreme POIs. They are of more quality and high probability because whenever an extreme POI fails, we already know that no price is looking to change direction. So now what happened here is when price push up to this zone, we went to a smaller time frame. If you are using 1 hour, your smaller time frame should be 5 minutes, right? So if you see here, right, you know the concept of a fake chalk, right? After price tapped into this our point of interest here, this first tap, right? Because for me, I normally use 50% mitigation. That's why I avoided this trap here. So when price tapped into this our point of interest at this point, price push down gave us this chalk here from the 5 minutes. Now, after giving us a chalk, what we're normally waiting for is we're waiting for inducement, right? We're waiting for inducement to be taken out. Now, our level of inducement at this level was this one. That is our inducement level, this. Now, once this inducement is taken, right, you can look to sell above here. You can look to sell directly here. So you can see that price reacted from this, then fell. So when you sell above here, what your position is supposed to look like is something like this. Then you target the lows here, right? This is how your position is supposed to look like. That was around if you are somebody that wants a more conservative stop loss, yes, this is how your position is supposed to be. And if you're somebody that wants a higher stop loss or a more safer stop loss, right, you put your stop loss above the bigger time frame POI. So what normally happened is here this was a valid entry, right? But it got a stop loss or it hit our stop loss. So what we are waiting for is 50%. It's not for you to reduce these losses, you just wait for 50% mitigation of your POIs. But when that happens, you know that you lost many of your trades. So if you look at our higher time frame, right, you see that you go back to the 1 hour time frame and you look at that zone. Look at this zone here, right? This here was not the entry here was not caught using chalk. I caught that entry using single candlestick mitigation. You see that this high here was swept. This this candle swept the high of this candle, right? So what we simply waited for was for price to push below, close below this candle. So in a smaller time frame, this is how it will look like. This is how it will look like, right? This is our sweep on a bigger time frame, which is the 1 hour. Now on a smaller time frame, which candle swept was this move here, right? It was this move starting from here. This was one big candle in a bigger time frame. So we wait for price to close below this candle. Once price closed below this candle, which happened here, we had all we needed was for price to push and trade back into the zone. So which happened here. So this is how our position looked like. The position that you saw from the beginning of this video. This is how the position was taken. We put our stop loss just above here and target the extremes, right? We target the extreme. So that is how the position that you saw, that is how the position looked like from the beginning of this video. That's how we took the position. So you don't necessarily need to enter an aggressive when price is pushing up, right? When price is still making something of this sort like this, when price is pushing up like this, you don't need to just say no, price is just going to turn here. Let me just place a trade. Pa! This can just happen. So you can wait for price to start pushing down. You see that no price has given you the intention that price wants to start pushing down. Then now you can look for a pull back and continue. That's how you trade. That's how you trade. You don't just aggressively wait for price to say no, let me just enter here. You're not the one controlling the market. So you should be wary of that. So that's how we caught this entry. And what happened is the entry push down missed our stop loss, our take profit by some uh, pips. Then when news came, news pushed back prices back to this entry. So if you are somebody that was trading news, you could have taken this trade. And yeah, after news now price dropped the next day. This trade took 3 days to play out, and I sent it in the Telegram group, right? This trade took 3 days to play out. So guys, that will be all for the video today, right? So if you have learned something from this video, please subscribe to my channel and let's keep going. I know I've not been uploading frequently, but I will try my best with your support and your willingness to support this channel. I will see that I can increase the number of videos I upload, because that's the only thing that keeps me motivating. At the moment, we don't offer anything, any sort of mentorship. So if you want to learn, this is the only way that you can learn. And for you to support me, just hit that subscribe button. So that will be all for the video today, guys. Have a nice trading week.